Ladies and gentlemen, if you were in denial before of a Tesla short squeeze and gamma squeeze that is currently going on, if you were a little skeptical of if this was going to continue or not, just check out what happened today. Tesla, at the time of recording this video, is up 2.2%, hit a new all-time high today of $431.60 per share. Take a look at other big tech names. Apple's down 0.5%, Meta's down 2%, Amazon's down 0.6%, Netflix down 1.5%. What about Nvidia? Down 2.7%. Google down 1/3%, and Microsoft down almost 1%. They are all red today, besides Tesla. Tesla is massively outperforming. Even take a look at the equal weight S&P. The RSP is down almost 0.5% today, actually hitting a pretty critical support level. If that doesn't hold, it could get pretty ugly. But we'll talk about that a little bit more in the next video when we discuss what to expect next week. Now, Tesla has some good news out today for Robotaxi, but not in the US. This time, it's in Switzerland. In the news today, the Swiss Federal Council enables automated driving in Switzerland starting on March 1st, 2025. This will be possible for use on highway with autopilots. This is hands off the wheel, yet drive safely. Driverless vehicles on approved routes monitored by an operator, and automated parking without a driver in designated parking buildings. The new law makes room for innovation and enhances traffic safety. Now, this is very interesting because this will essentially allow FSD into the country. At least autopilot, consider that FSD, okay? But this second part's the bigger news. I guess FSD in Switzerland, no, they are not a part of the EU, but they are in Europe. So it's kind of one step closer to FSD launching in Europe more broadly. But it says driverless vehicles on approved routes. That is literally nobody behind the wheel. Driverless vehicles. But it has to be monitored by an operator, like Waymo, that has people that monitor Waymo rides. This is something I think Tesla will also have to do in the United States, at least at first, okay? A lot of states are not going to want Tesla to just throw their robotaxis out there with nobody actually watching the vehicles from a distance, right? From, warehouses or factories of people, monitoring the vehicles. They're going to want to see that. So this is kind of, getting ahead of what's already coming from Switzerland's point of view. This could also, again, pave the way for a larger robotaxi rollout in Europe. And that is very exciting. Tesla China has officially announced the launch of Actually Smart Summon in China. Elon Musk says your Tesla can now drive you from your house in one complex city to another house in a different complex city. But that part is in the US. Holmar's catalog says he just recorded FSD 13.2 driving from Los Angeles to San Diego with 0 interventions. And let's face it, it's really just a matter of time before many states start to approve Tesla's robotaxi endeavors. Tesla is obviously in the process of submitting those applications, and inevitably they will be approved. Now, Elon Musk guided Tesla shareholders towards California and Texas to be the 2 states that give Tesla approval for robotaxi next year. I think, though, you could be looking at up to 10 states, potentially, that allow robotaxis next year. Obviously, you will have to have these rides being monitored remotely, okay? Imagine it like somebody sitting there watching 10, 20 different screens, and if the vehicle messes up, they are able to take over and correct the vehicle in those adverse scenarios. And again, I know some people get caught up in this, oh my gosh, people have to watch the cars drive on the road, but that's just the reality of legislation, right? Nobody's just going to allow vehicles out to operate with nobody monitoring them until we grow more comfortable as a society with vehicles not being remotely, operational. Whether or not there is someone actually monitoring these rides behind a screen will do nothing to deter investors from getting excited about robotaxis. That's just kind of a part of what needs to happen. Tesla will be bringing its Cybercab to 5 new locations in the US this weekend: Los Angeles, Colorado, Tampa, Chicago, and New Jersey. Elon Musk says that it is going to be a game changer when FSD V13 is widely released to all FSD users. And a $10 billion program to buy EVs for the US Postal Service is far behind schedule, with defense contractor Oshkosh not disclosing significant manufacturing difficulties for more than a year. The USPS has received only 93 trucks, far fewer than the 3,000 expected by now. Jay Leno says everybody who wanted an electric car bought one. That's why I think Elon is so smart. Every liberal in California bought a Tesla. Conservatives say, quote, that's a hip guy. Well, now he switches to Trump, and you got all these conservatives buying electric. Which I don't exactly agree with that, because I am a conservative and adopted to the EV narrative, well, early on. So I don't think you can exactly just put a political sticker on, EV buyers, but it's kind of directionally positive. I would say it's not a blanket kind of thing that you can put on everyone, but directionally I understand what he's saying here. And from that perspective, then maybe Elon did just open up potential buyers of Tesla that maybe would not have bought Tesla otherwise. We'll see. And in a new video coming to us from Tesla's Giga Semi factory out in Nevada, it looks like this thing is nearing completion. Dawa Capital Markets has raised their Tesla price target to $420 per share from $285 per share. They cited potential regulatory tailwinds under President-elect Donald Trump's administration, which could accelerate Tesla's Robotaxi deployment. Oh, and if you guys have not gotten your Tesla Mezcal and you wanted it, it is back in stock for Christmas. In the news today, import price index came in at 0.1% month over month. The expectation was negative 0.2%, and export price index came in at 0.0% month over month. Expectation was negative 0.3%. So yeah, not great inflationary data. And that makes sense why you are seeing 10-year Treasury yields under pressure yet again today, up about 7 basis points to almost 4.4% again. Broadly speaking, the Russell is getting destroyed, down almost 1%. The Nasdaq is down 0.32%, S&P 500 is down 0.23%, and the Dow is down 0.26%. And honestly, I'm getting a little concerned about the market dynamics that we have seen lately. Yes, historically, the second half of December is very strong, and there's a lot of people that are bullish, and I think there's a lot of reasons to be bullish. But the stock market has just achieved something that it has not done since 2001. 9 straight days of more stocks that are dropping than going up. Negative breath. All while the Nasdaq has made a new all-time high yesterday. This user says, food for thought. And it's like the markets that hit new all-time highs, but yet the average stock has been declining. It's like, what's going on? We kind of seen this a lot in 2023 and in some points of 2024, where a lot of stocks were falling, but just Mag 7 was going higher, and you kind of got that divergence going on. Well, it's happening on a larger scale now. You can also see this on the CNN Fear and Greed Index. Today, it's sitting at 50. Yesterday, it was 48. So I mean, we're broadly down on markets today, so I don't know why that's exactly happening. But you can see stock price strength. This is the net new 52-week highs and lows on the New York Stock Exchange. It is an extreme fear. So there's a lot more lows than 52-week highs on the markets right now, okay? Stock price breadth, though, this is really what we're referencing. This is the volume summonation index. You are in extreme fear levels, getting, to some of the similar levels we were at in July when a lot of stocks were declining, but yet, Mag 7 had really led markets higher up until that point. And then we did get a broader kind of market rally, but doesn't look great as of right now. So I'm just getting a little bit nervous as we are heading into, the last final days before the Fed coming next week and into the start of January. I do think we're going to get a correction in Q1 of 2025, and you're starting to see more warning signs of that right now. But we will talk about this more in the next video. Option activity for Tesla stock today from hedge funds and institutions is still very positive. You have 245 different trades totaling $146.1 million with a positive order value of 79%. Volume today for today's expiration to the call side is 55.63%. Volume to the put side of 44.37%. So all looks good there. And if we take a look at the short position in Tesla, currently at 2.77%, short interest of free float, $32.34 billion sold short in Tesla, totaling 77.34 million shares, currently sold short. And on net today, you have about 407,000 shares being covered on today. So it does look like hedge funds and institutions want to reduce their negative bets on Tesla, which is a pretty good sign, again, heading into year end. Surprisingly, though, sentiment over on StockTwits today for Tesla is bearish at 35. Yesterday, you were extremely bullish at 81. A lot of this probably has to do with other big tech names that are selling off today. Message volume is high at 63. Yesterday, it was extremely high at 84. And participation ratio today is normal at 54. Now take a look at the percent of stocks trading above their 50-day moving average. This kind of puts into perspective just how rough a day like today actually is. You're down to 53.45% of stocks above their 50-day moving average. 4% of all stocks today are falling below their 50-day moving average. That is down 7% versus yesterday. So yeah, even though the indexes are not moving too much themselves, there is a lot of pain under the surface here on the day today. Specifically for Tesla, Tesla is continuing to run about 5,000 different ads with Google. And if we take a look here at inventories have recently shot up for the Model Y at about 10,000, the Model 3 at 3,700, Model X at 3,000, and the Model S at 2,300. Markets are pricing in a 99.0% chance of a Fed rate cut coming next week on December 18th. That is 5 days, 1 hour, and 15 minutes away from right now. There's currently a 1% chance of no cut at all next week. And so really, you've basically confirmed the Fed's going to cut rates 25 basis points. The Fed at this point would have to come out and pretty much say they're not going to be cutting rates next week to move these probabilities, because historically the Fed does whatever the markets are pricing in. That's why they use a forward guidance, okay? That's why they kind of try to cradle markets into accepting what they're going to do, right? They don't want to spook the markets. Like imagine if we were expecting a cut, December 18th, but the Fed actually was going to raise rates. We are not expecting that. That would crash the markets. That's why they use forward guidance. So that's why they do what the markets are pricing in. So as of now, as long as nothing changes dramatically, next week the Fed will be cutting rates 25 basis points. In theory, this should bring down 10-year Treasury yields, but some of the inflationary data that we got this week, CPI and PPI, just came in really bad, so yields have been on an upwards climb. Now, switching gears a bit, looking at Google Trends data for Tesla, you can see things look pretty good. The Model Y at 62, the Model 3 at 55, the Cybertruck at 66, the Model S at 22, the Model X at 14. If we look more narrowly at the United States. Narrow this down a bit. Google trends look really good here as well. Cybertruck at 45, Model Y at 34, Model 3 at 27, the Model S at 12, and the Model X at 10. I really don't think there's anything to worry about heading into the Q4 delivery number on January 2nd. And again, from a technical perspective, Tesla looks really good. What we continue to see driving Tesla higher is a gamma squeeze. If we do get the short squeeze that I think is going to happen into year end, then you could start seeing some larger, more explosive updates for Tesla. Now, I do think to a certain degree, as long as the Fed does not give us any groundbreaking new information, we are going to get a new summary of economic projections next week. That'll be important for markets. But as long as nothing is dramatically worse than we think it's going to be, then we get the Fed out the way, we knock out some data next week, and that likely just frees up some momentum to move markets higher. In that scenario, then I think Tesla will experience a short squeeze and likely close December above $500 per share. The trend is definitely our friend, and I will say that. We continue to go higher. Tesla, even on the RSI, is at 77.3. You're not nearly as overbought as Tesla tends to get before these rallies end. Tesla, I mean, on a pretty regular basis during these kind of rallies, can see its RSI in the high to maybe mid 80s. So you could see another 10-point increase on the RSI easily before this rally comes to an end. And that would roughly put us, $500+ per share. So let me know what you think about all of this information down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.